Bitcoin, introduced in 2009 by the mysterious Satoshi Nakamoto, is a decentralized digital currency that functions on blockchain technology. Unlike traditional currencies, Bitcoin operates without a central authority, using a peer-to-peer network to facilitate transactions securely and transparently. Transactions are recorded on a public ledger called the blockchain, maintained by a network of computers known as miners who validate transactions through complex computational processes. To acquire Bitcoin, individuals can purchase it on cryptocurrency exchanges or through peer-to-peer platforms using traditional currency. Once acquired, Bitcoin is stored in digital wallets, which come in various forms such as hardware wallets, software wallets, or even paper wallets. Securing one's private keys is crucial to safeguarding one's Bitcoin holdings from unauthorized access. Bitcoin offers several advantages over traditional fiat currencies, including lower transaction fees, faster cross-border payments, and increased financial privacy. With a capped supply of 21 million coins, Bitcoin is considered a deflationary asset that may serve as a hedge against inflation. While Bitcoin transactions are pseudonymous and offer some degree of privacy, they are not entirely anonymous. The blockchain's transparency allows anyone to view transaction history, but user identities are protected through cryptographic keys. It is essential for users to implement robust security measures, choose reputable wallets, and practice good cybersecurity habits to protect their assets.